Hi, this is Michael, and welcome to the Donchian Channel Forex Trading Review for Wednesday, August 8th, 2012. It is now 4 p.m. Pacific Standard Time. Please take a moment to review our disclaimer. The New Zealand dollar Swiss position hit our stop loss and is now fully closed. The pound CAD position remains open and is highlighted in green. The order for the New Zealand US dollar was canceled after trend strength comparison was made today. A new order was placed for the US dollar CAD. That is highlighted in blue. Here's the price chart for the New Zealand dollar Swiss pair. Our stop loss was hit and the final 2 micros were closed. The New Zealand dollar Swiss trade is now closed after almost 6 weeks. Here's the pound CAD chart. There are 3 micros open on this position. The stop loss was moved to 1.5703, which is 10 pips above the 6-day Donchian channel. This point is indicated by the blue dot on the price chart. Here's the price chart for the US dollar CAD. We have an order to sell 5 micros at 0.9926. Our first target is 0.9863, and our stop loss is at 1.0095. From the price charts, we can determine if a pair is trending because the ADX will be green. This trend review list shows those pairs today that have a green ADX. Also noted is the direction of the trend. In this part of the analysis, we determine the strength of the trend. The pairs that are trending are listed in the left-hand column. The center column shows the strength for each of the 8 currencies. The information from the center column is then reconfigured in the right-hand column to show the strongest and weakest currencies. In order to choose the pairs that have the highest probability of being successful, we match the 2 strongest and 2 weakest currencies in which to look for a trade. The pair must also have a green ADX or it will not be listed. Today's 4 pairs are listed here. Trading tip number 17, risk management. In tip number 16, we talked about money management. At first glance, you may wonder, what is the difference between money management and risk management? Money management is the process of allocating a fixed percentage of your account for each individual trade. This allocation is a process to determine how much money you will risk per trade, whereas risk management is looking at where your stop loss is placed and then determining how many microlots you can trade. Here's an example. Our risk per trade is $100 and the number of pips to our stop loss is 140. We find the number of microlots by dividing the risk per trade by the number of pips, then multiplying by 10, and we'll round to the nearest whole number to determine the number of microlots. In this case, $100 divided by 140 pips equals 0.714. Multiply by 10, and rounding off, we get 7 microlots. It must be noted, though, that this calculation is using the average value of a pip as 10 cents. I find this is a simple calculation, and it works quite well when trading microlots. When trading mini and standard lots, it will be necessary to be more precise. Today I have another quotation by Courtney Smith from his book, Make a Living Trading Foreign Exchange. The pressure of making and losing money creates a lack of objectivity that clouds your mind and therefore creates dubious trading ideas. My interpretation is, most people do not have a trading plan or a trading system. They enter and exit trades based on their feelings. Their feelings, however, are affected by the fear and greed of trading and also by their health and what is happening in their daily lives. This is why they lose money. Thank you for watching the Daily Review. Please post and share if you have any suggestions for improvement, comments, or any questions. If you would like to have more detail on the trading strategy, please go to www.donchiantrader.com and request the free trading guide.